All right, boys. Bit of Monday, bit of Monday update time. Now, Friday night saw a pullback in some of that risk on rally that we saw post Fed. In fact, we've seen most of that rally now pulled back um, substantially in the last couple of days. Now, this is sort of what I thought was going to happen in terms of the market having a little relief rally, but still that negativity remaining about the bond markets. And if nothing came through to sort of sedate that, we're going to test to the downside, potentially even turn into some ultra negativity. Now it's just on the precipice here of potentially doing that, and I think that's the trade for the next week anyway. Getting short and getting risk off. I can't see much out there that's going to help keep risk on in the current environment. I expect OPEC to disappoint, and we should, I think, at least be open to the idea of risk off trading. You're seeing some pretty heavy selling in DAX as well. I think that adds to that little bit of idea. So I was skinning through some of the trades to get involved in on that. ASX I trade a fair bit, seems to be under. Hasn't got the memo yet that we're going low. So I'm just going to sell with a tight stop. Put that stop just above that previous high. I mean, it can do this in the morning, but it's suggesting that we are going down. Then ASX has still outperformed in the last couple of days anyway. I don't mind this as a rollover point, and if it starts to look anything like the DAX has got a lot more room to move. It's pretty negative headlines regarding German banks. Merkel's not going to bail out Deutsche Bank. The fact she's even talking about it, right? It's like, don't say it, right? Don't say that. Don't. What's wrong with Deutsche Bank? That's what everyone's going to think, right? It's it's a silly thing to say. It's a silly thing to say. Even if you're not planning on bailing out Deutsche Bank, you don't talk about it. Just the bank's viability in low interest rate environment, same as Japanese banks. It's just questionable. So the Mexican trade, this is going to be impacted tomorrow, actually, by Trump, okay, and Hillary debate. So this whole trade is a Trump losing trade. That's the trade idea. Some of the polls suggest it's even tightening up a little bit more. So we are going to be interested in watching that. If you don't know what time it is, it's 11 o'clock Sydney time. So that's 16 hours from now. Alright, so depending on where you are in the world, it might be too late for you. But if you're in Asia, it's an easy time zone to watch. Just basically, that's going to impact that Mexican trade. If any of you are following that, this is ridiculously high in terms of where we've come from, where we are, and valuations have this unsustainably high, right? So it's more of a fear at the moment that Trump's going to win, and just a little bit of US dollar strength and emerging market sell-off and oil weakness is involved in that trade. But mostly Trump. Most of that is Trump starting to win or starting to come back into the polls, and that's just destroying NAFTA, building a wall type, deporting people rubbish in that trade. So in the scenario that there is some risk off, dollar yen definitely tests 100, probably breaks it. It's hurting the pound. Pound is related to the dollar yen via the pound yen. They're pretty close at the moment. And some pretty heavy pound selling came through early in the start of the European session. There was an attempted rally, small rally during Asia, but didn't get far. So yeah, I mean, we're back at that 130 level. I mean, it's just a big number on the cross, doesn't mean it's going to hold. It looks pretty sick, right? But substantial selling 4 weeks. So the big week for the pound is next week. I'm letting our trade run against me a little bit too long. Obviously, initially had stops there at 86. And I thought I was smart for moving them. That was just usual, same shit. Letting a trade too long, run long against you. Now, the big data next week, if you know what moved the pound at the start of this month, was the PMI data. So just let me bring it up for you. Alright, so the most important stuff here next week is to see whether the manufacturing, construction, and then the services PMI all come in strong again. And that would maybe give a pause for the BOE to maybe dial back some of the dovish rhetoric and expectations here for the UK economy going forward. So they're basically still open the door to further stimulus, and they're probably going to leave the door open, a little bit. But it's if they start to acknowledge more that sentiment is strong, then that could start that relief rally, which is at some point going to happen because the world hasn't ended yet with the UK. It's just whether it's before or after we test 125, right? Market sentiment's pretty bearish at the moment. And risk off is not helping that. So it's, stay negative. So dollar yen testing 100 is pretty big for the market. Dollar yen breaking 100 is pretty big for risk off. We're going to see if that happens in the next 24 to 48 hours. Feels inevitable, okay, but if it holds somehow, miraculously, then we reevaluate the whole risk off mode that we're in. And, this is a perfect week for it because there's not too much data. In terms of what data there is, most of it is central bank speakers. Okay, so central bank speakers usually stick to the script that we've been given before. Unless Yellen wants to update the market as to we've misunderstood the FOMC's willingness to raise rates in December, say. Maybe she doesn't like the fact that the futures market isn't pricing in that chance high enough, then it should be a pretty big non-event. She'll just say, yada, 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 this is why we haven't raised rates. More interesting to me is what Draghi says in relation to March QE. Now, he has a big part to play in the risk on, risk off, actually, because the European bonds are a big part of the rally in the moment. So, the rally in yields. So, if we can get that under control, get some of that sentiment reversed, then we can start talking about buying dollar yen. We can start talking about buying pound yen. But just not now, right? And not unless he actually says the right words. Later in the week, we do have, Yellen speaking twice because it goes for 2 days. Then we do have some manufacturing data from China. This is not the right time scale. What is this? Get out of here. I think it's coming in on Saturday, which would put it on the weekend, so something to keep in mind of for the Aussie dollar traders. So it's coming in Saturday, the market's closed there. But that's the beginning of all the PMI data. And then obviously next week's huge in terms of central bank meetings and the NFP. But this week's relatively light, apart from the central bank speakers. Kuroda spoke today. He said, there is no limit to monetary policy, and it may be difficult to target to interest rates, or long-term interest rates, but they're preparing to do something. Now, the market didn't really take that as anything to run with, so dollar yen didn't weaken. In fact, dollar yen immediately started to fall. Maybe they were expecting more from him, some more specifics. Yeah, that's really what the market needs now from the BOJ, specifics. Where they suggest rates can go to. It's like and how close they are to cutting rates. Just to try and get some support in here. Otherwise, very likely we're going to the next BOJ meeting at 98 or 97 or even 95 if things get really bad in terms of risk appetite. But 95 is a bit ridiculous. 98 is possible. 95 requires euro to do something, and the euro, it's like this hibernating bear that doesn't want to wake up. Now when it wakes up, at some point we're going to see some big moves, but we haven't got that yet. So I'm preparing myself for some risk off trading. I'm not ultra negative just yet. I'm just pretty open to that view. Like I said, I've only got one trade on. I missed the DAX sell off at the start of this session. I was looking for that actually at the start of the European session, and by the time I was a bit busy at work, by the time I got around to looking at it, it was like, oh, it dropped pretty quick at the start. So I was like, okay, all right, this is what's happening. We've got some downside, still got some levels to break, but it's going to be the US to lead that way. Below the Fed levels, would start to target 18,000 again, and that opens up significant room below 18,000, right? So, I mean, this is not even a big move, guys. 1,000 points on this market. I mean, it may seem large in terms of the size of the numbers, but in size of that move, we're just talking about a pullback to here, which doesn't even threaten the longer term uptrend. It's just really a bit of downside, just clean out the market. It seems like it's struggling to get to the top side these days. So yeah, I mean, the bulls definitely noticing, I think, the lack of follow through from the Fed rally. It makes a little bit of sense to try and go down now. So we'll see how that plays in the US session later tonight. It wouldn't surprise me at all if we're significantly lower later. That would lead to the dollar-yen test of 100 tomorrow. And it'd be a brave person to buy dollar-yen again. This is not the first rodeo down here. This is a very small little rally. If you may imagine, there's another red line, right? This is a daily. Okay, 4 hour. I mean, you're going to be pretty brave to be buying off 100 if we go into Asian session testing that. Let the Asia session break it. I mean, I don't like the US session to break big levels because Asia likes to buy that sort of stuff. So it's a little less clean, but if Asia leads it, then Europe can play it as well. So that's just a little bit of dollar-yen general rules, right? US session breaking it sort of upsets the Japanese traders. They like to be in control of that one. But Nikkei's looking dreadful, so everything's lining up in terms of this trade. So Nikkei's got that strong correlation with the dollar-yen. So no reason to be bullish here, boys. No reason to be bullish. We've got ourselves a significant downside risk, and I think it might even mess with the Aussie. Now the Aussie has been attempting to rally. There's a bit of hawkish sentiment today from from the new central bank governor. But and also lots of Aussie Kiwi buying. Aussie Kiwi's a favourite of ours. Lots of Aussie Kiwi buying in the last 3 or 4 days. Tape it out a little bit today. Looking to see what happens here on the dip back below 105. I don't mind buying Aussie Kiwi. I just want to get the best level I can. So I used to have some here at 106. Cut those. Just looking to buy on the dips, not get stuck ridiculously high. And obviously the Euro pound's just getting wrecked as the pound is getting wrecked. But the pound's an interesting one. I mean, it won't do well if dollar yen's selling off. That's just the way it is. But it's got some big levels, 128 coming up, and that important UK data next week. So depending how we go this week, next week I think's the week to look to buy, not this week. A little bit of risk off, dollar yen below 100, yada yada yada. Oh, Nikkei. Jesus. I mean, selling dollar yen makes sense if you want to look at another trade to do right now. You got gravity on your side. But obviously, I mean, look, that's a pitiful bounce there, guys. So I don't know. Maybe we'll sell. Maybe we'll follow the trend for a little bit. All right. Let's see if we can get into trouble. What sort of trouble we can get into today? No. There's no reason to buy the pound just yet, guys. Morphs. Yeah, I mean it's great level. Yeah, if you're not playing stops, then buy, right? And come back in 6 months, it'll be significantly higher, most likely, right? But short term, you might get a better price. Very little reason when the pound yen's getting smacked around to try and pick the bottom on the pound. Geez, that fell quickly, didn't it? I have to sit on my hands, not get into trouble with that pair. Selling DAX is okay too, guys. Little bouncer might be a bit safer. You know, maybe we get a little bounce and start a US session, then sell into the little rally on the DAX. I favor selling DAX rather than the US stocks at the moment anyway. And I've got a little bit of exposure to negative sentiment by selling ASX. Alright, let's have a look at a couple of the trades in the trade room. When there is an economic data, really you got to play sentiment, guys, and that's the sentiment game is the stock market game. And there's just a stock market and OPEC this week, and I just don't know if the alright, he's brave man buying above 105. Like, he obviously doesn't care that the Kiwi reverses the last 10 rallies in the Aussie Kiwi, right? Has it been a sustained Aussie Kiwi rally since we're up at 113? Pound yen long. Ambitious, 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 ambitious. What's the reason? Is there a reason inside? Because it tested the Bollinger Band. Alright. Alright. Retested the Bollinger Band. Jay's sold some gold. Gold's getting smacked around in the start of Asia, so perhaps it's going to work out for you, mate. Where's it? So, start of Europe. Gold's a funny beast at the moment. I mean, risk off should be helping, but it's just struggling. I mean, it easily could have been 1400 if we're trading a few years ago on the same sort of risk off trade. Weak US. Another Aussie Kiwi. He's short. I like this too. He's got his stop at 40. He's got his entry at 40. Stop at 106.40. Oh, it's a really big stop, man. I don't think you need your stop that big. That's it's not a bad trade. I mean, it's definitely, you don't believe the QE sell-off. Just stops a bit big for the risk reward there. Now, pound Aussie, that's like the combination of, I mean, it's not working out right now, but and it's definitely a possible heads and shoulders, right? So why not just wait a little while and see a couple of green bars, and then you can hop in on this. I mean, I understand that the Aussie can get really crushed in a risk-off trade, but that risk-off trade's still in its only second day, so you need that. Alright, we're buying pound yen. No, not yet. Dollar CAD long makes sense. Fair few people talking about this this trade in terms of OPEC disappointment, also this risk off change in the last couple of days, and if that's going to follow through, then yeah, dollar CAD will be back up to that frenzy. Remember that frenzy that was happening a few days ago before the Fed inspired rally. There was everyone talking 135, 138. We could start to be back into that sort of game. Yeah, it's a hard day to trade actually if you because you're basically trying to pick what the next move is, right? If you're involved in today, you're playing what the next move in the stock market is, and it's a fickle beast. Draghi is important today, so I do want to sell a DAX. I don't want to miss out on a big move, but you know, you do want to hear what Draghi has to say. I'm pretty sure he knows there's a bit of pressure on the ECB now. Jordan speaking. Yeah, Jordan's nothing. Fuck Jordan. Bloody SMB. Actually, I can't remember now. Was Jordan in charge at the or did they replace the guy who actually cut the floor at 120? So it's yeah. I mean, look, he just doesn't speak. Doesn't speak too much. Well, it's yeah, it's compelling levels, precarious, but just keep an eye on dollar yen first. You need dollar yen to really, more than the pound, you need the dollar yen to show signs of stability rather than the pound yen, because if dollar yen breaks 100, then this is going a lot lower. So yeah, I mean, it is really nice level, but it's extremely low. It's extremely dangerous and weak at the moment. And if stocks do sell off, then this is going low, and it's broken 130, so no reason to buy just yet. Chasing obviously is dangerous here, selling, but if you put a gun to my head, I'd sell. Next week though, I'm looking to buy if those PMIs come in strong, especially I mean, the first one's services, and if the services remain strong, I'm going to be inferring that the next two are going to be strong as well. So I'll play a bit of that cheeky game. EG looks like it's going to 88 short term. I mean, obviously, ideally, we'll be able to get some sell levels up at 90 on EG, and then just hold it, right? Hold it for 6 months, 7 months. But you know, that's sort of like the high level I think is going to get to 90 in a max, you know, frenzy of pound selling. That's pound to 125 sort of level we're talking there. Pound against the US cable. Dave West. Dave West was buying Aussie Kiwi way back. Yeah, I remember that, mate. You're saying I'm buying and I'm just gonna hold it, hoping that you're still holding it, right? Because I think it's I don't know what level you bought all your longs at, Dave, but you know, if you do hold it and it does make that substantial break, and it looks like the RBNZ's going to cut in November, then you know, we have this chance here of that 110 level. Okay, I mean, the burden of proof still on the bulls, not on the bears, because the bears have been in control for literally years. But the bullish case makes a lot of sense, and it's just the timing of that case. Remember, we looked on Friday, we looked at the Aussie Kiwi yield differentials. Alright, so the difference between Aussie and New Zealand interest rates usually dictates how the Aussie Kiwi moves. In the last 6 months, there's been this huge divergence. Now, that divergence hasn't been there in the last 10 years, and so it's smart to assume that there's going to be a snapback. So the Aussie Kiwi rate will go back to fair value based upon those interest rate differentials, which is 110, 111 minimum. And then the chances of overshooting to 115, 120 is always there. I mean, these are very familiar levels for the Aussie Kiwi. This is unfamiliar levels for the Aussie Kiwi. This 105-ish level. So, yeah, it's something to watch. Alright, let's have a little look at some... have a little look at some research. Start off with the CFTC speculators. So this is the it's released a week behind actually, so it doesn't include the movement from the last week, so don't get too excited by it. I don't know why they do that. It's like a relic of the past, right? They could probably do it real time these days. Yet we I mean, I don't know. Bank transfers still take 24 hours in Australia for some reason too. So I don't know. These banks some things just don't change, right? So this is up to end of September, or end of September 20th, and that means it doesn't have the Fed numbers in it, doesn't have the Fed movement in it, but it's still good to watch the change in overall. So it'll be interesting to see next week how the Kiwi has changed. Remember, there's a lot of leverage funds long the Kiwi. So pound saw a lot of buying on that first dip. So that first dip took us down to like 133 pre-last week. Where are you, pound? That's interesting. Couldn't support it though, huh? Couldn't support it. The short on the Mexican is getting even bigger. That's good. We want to see that stuff. We want to see that stuff. Standard deviation away from the mean. Ruble. Jesus. So, currencies like this do not stay like this, yeah? In terms of positioning. Kiwi's still a little bit long. So net long positioning in the... Wow, that's a fast drop in net long position. Right, so in theory that should support a reversal at some point. That's interesting. I suppose maybe people were lightening up into the BOJ maybe. Okay. Alright, there's been a significant pullback in the net long pound positioning. Net short, I mean, pound positioning. And yet the pounds continue to fall. That's not what we want to see. That's not what we want to see at all. I'm not like I'm an expert at interpreting IMM data, COT report stuff. I mean, I've rarely looked at it. I just notice when things are heavily one way or the other, because that's usually towards the end, yeah. Alright, just going to check if there's any macro events I've missed out. Yeah, they're targeting on Clinton. According to Deutsche Bank's Frank Kelly, the stakes are high as the opinion poll leader after this first debate has won the election each time over the last 40 years. I did not know that. Alright, so let's check how these guys do tomorrow. And then a couple of days later, when you get the new polls out, let's see who's in charge. I mean, it's huge for Trump, right? Trump has to destroy to have a chance. Right, OPEC finishes on Wednesday. I thought it finished tomorrow. Market's not expecting much, so don't know how much negativity you'll get out of it, but still be negative, right? The world's talk about Saudi Arabia is ready to freeze production or even cut production. We'll see how they play with the Iranians, though. That's the most important things. There's a little bit of, I mean, this stuff they're talking about here is pretty important. Some of the negativity, well, actually, a lot of the negativity in the pound is based upon some signals from the Europe that they're going to play pretty hard in negotiations with them. And so, if at the end of the day it leads to what they call a hard Brexit, where there is no access to the single market, you know, in similar terms to what they have right now, then, you know, that's, I think, factoring into a fair bit of this price. So positive negotiations would be really good, but there is some reason to suggest that some members are going to try and punish the UK for leaving as a deterrent to other nations in Europe to not leave. So that's a pretty big thing in terms of, I mean, game theory, right? Just thinking about why they're acting like this. It's quite a big report today. Yeah. Currency markets have been pretty tough lately. Choppy, right? Just. I mean, Aussies, you know, especially because most of my clients trade Aussie, right? So it's like, well, which way are we going today? And every time we've got to the top, we've failed in the last 3 or 4 months, and then every time we got to the bottom and looked pretty bearish, we've bounced. So it's hard to have conviction, yeah. It's hard to be holding trades, not taking profit, and that leads to a style of trading which is not conducive to volatility picking up. So the lack of volatility has made traders change their style, and you've got to remember to change gears when the market changes gears. Yeah, I'm a bit of a trend trader, right? I like when the market's showing me some big moves. You know, apart from the pound, we're not getting big moves. Or even the pound's, you know, it's just not even that great. where if you're just starting trading, you're trading in a non-volatile period. This is not movement. This is not trading as normal, guys. This is when I say Aussie Kiwi to 115, back in the day, that was a normal thing to say. Oh, okay, yeah, it's gonna move back towards 115 in 6 months. Now that seems like climbing Mount Everest. And hopefully we do get some sort of pickup in volatility going forward. All right, what's UBS got to say about our new governor? So Governor Lowe, but he was working with Stevens for a long time, so. Oh, this is a bit pedantic, right? They're going pretty deep. Just a couple of words and they're trying to say that Lowe's a bit more hawkish. Alright, we might finish up with a little Mexican affair. Let's do a little market check actually. Before we look. Remember last week we looked at Deutsche Bank's outlook on the Mexican, and they were doing it via options. We'll see how Morgan Stanley's playing it. Or maybe we won't. Come on. Geez, we're lucky we took some profit there on the DAX, right? Maybe we should sell some DAX too. I am going to sell half of you. Let's see if we can try and make some money here. Right, 10-day moves in the Mexican. So it's pretty up there, guys. This is huge in terms of its general moves, right? This is getting there. But they've had bigger moves. But in terms of the general pricing, it's still quite high, right? It's still extremely sold off, undervalued, which means dollar Mexican higher. Yada yada. Banksicle. Mexican bank's called Banksico, okay. Alright, let's see about intervention. Intervention helps us too. So there is a pretty tight correlation here. Dollar Mexican and Trump polls. So really we're going to know about this Mexican trade next week. This week after the polls release post first debate. Look at us getting involved in all these emerging market currencies. Alright, so they're targeting 17.3 and 17.5. That's like a 10% rally. Alright, that's enough of that. Enough of that. That's all I really wanted to know, how far they thought it would fall. Alright, we might end it up there, guys. Finish up with a little bit of text. That's about it today. Just keep an eye on the stock markets tonight. They're gearing up for some downside action, so $88.15 on the euro pound. And the low on the pound against the US is 127.98 post Brexit. Okay, so keep those levels in the back of your head. Dollar yen below 100 if you're looking to buy the dip on a break tonight. Yeah, look, I wouldn't buy 99.50. I would buy 99 though, going into Asia tomorrow. That's just for the Asian relief rally, and that's another trade. But I'm short dollar yen right now, so we'll see how that plays out. Alright, if there's any questions, we'll be back tomorrow at 9 GMT. If you're watching this over at YouTube, come across to Forex Signals. If you do want to ask questions, you can leave me a PM and we can have a look at some particular charts going forward. Other than that, trade safe, guys. Just be cautious here if you're long risk.